fellow traders, and thank you for coming to our first Technical Tuesday session. I know we decided to do something for the free members of our Forex Anatomy community. I know there's quite a bit out there. Hopefully we'll get more people to attend this live meeting, but it's going to be a brief meeting, and we're going to have these meetings every single week or every single Tuesday, and give you guys some technical setups or what could possibly happen on the Euro USD and the US dollar Japanese yen currency pair, because those are the two pairs that we focus on. If you're a free member, however, if you are a premium member, we do go over more pairs. We go over like 20 plus pairs, and things are going well with that. But what we're going to do first, before we actually start talking about these technical setups, well, let me first say, if you guys do not hear me right now, please let me know something or say something in the chat area. There should be a chat feature right at the corner of your monitor or screen, your platform. Just type something if you cannot hear me, either an N for no, but if you can't hear me, just maybe click a Y for yes. And then we can move forward and talking about what we feel may take place in the market. So then, I'll give you guys a few seconds just to chime in and just to let me know if everything is okay, just to give me a thumbs up. But I'm pretty excited about today. Of course, this is our first of many meetings to come. So it's just going to give you a taste of what we usually offer to our premium members. Some of the advanced concepts we may not be able to get to, but we're just going to give you guys a simple overview of just what we're looking at for these pairs, and hopefully give you guys a bias for today. But with that said, I guess we can move forward. I'm not hearing anything right now. I guess we can move forward and give you guys a brief market overview, because there is a bias for today. And the bias for today is to be more risk averse. You see the yen strengthening. You also saw the pound rally because of some data that came out earlier, but for the most part, the market is risk averse. We see the yen gaining strength, and whenever the market is risk averse, then we should expect stocks to fall. We could possibly see gold rally, but you have to bear in mind what the sentiment of the market is, because it could give you an idea of how we should trade for today. So I know Marvin's going to mention a few things about that, and then we're going to move forward. I know this is my brother Marvin. Yeah, by the way, I'm Melvin. For those that may not know, my name is Melvin, and then I have a brother, my twin brother. His name is Marvin, and we're responsible for Forex Anatomy. We're over it. We run it. So yeah, if you guys have any questions, you can contact us personally. But with that said, I'm going to give the mic over to Marvin, and he's going to talk about give you guys a brief overview of what's happening in the market, and then from there we're going to start analyzing the Euro USD and the US dollar Japanese yen pair. So all right, good morning everyone. Just like my brother said, my name is Marvin, and I primarily focus on some of the intermarket analysis and fundamental analysis that we'll be covering. We won't be covering too much in these small technical Tuesday sessions, but of course, for those of you guys that are a part of our lab trading community, know that we cover fundamentals, we cover the reasons why prices move the way they do, and even from an intermarket perspective, like what asset classes, what other instruments are doing, and how that's related or connected with the forex market. Or I'm excited to be here. I'm excited to be starting these technical Tuesday sessions. And for today, the intraday environment, or the intraday buys, just like my brother mentioned, is risk averse. We're witnessing safe haven flows into many of our safe haven currencies and assets like the yen. We're seeing a rotation of capital into treasuries, just in an attempt to insulate themselves from pending risk that's happening on a geopolitical scale. Some of you guys that have been following us for some time, that there's a plethora of issues that's still on the table that we have to really get resolved for in 2019, or else we can expect a continuation of the volatility as normal, and just risk aversion and just uncertainty and instability in the market. But for today, just like I mentioned before, we're coming off of a long holiday weekend in the U.S., and we're actually seeing the pickup of some much needed volatility or volume in the market. And for today, we're seeing some risk aversion, primarily due to some market concerns, some concerns over some relations between U.S. and China. I know some of you guys may have read about like a month ago, over a month ago, Huawei's CFO Meng and her being held captive in Canada, and right now the U.S. is pressuring for her extradition. So then this is creating some tension in the market, but we also have concerns coming out of the Eurozone, of course, with Italy's growth forecast dropping to low. So then there's a lot that's adding to or contributing to this price action where we're seeing the yen benefit in comparison to other currencies. So then right now, if you were to trade or approach the market, look to move into more of your safe haven assets, to your assets that have a more lower yield to insulate yourself from risk. Unless you see something technically that may violate that. And we may talk about that, but for the most part, what we're seeing today in the market supports a potential bias in favor of risk aversion or safe haven flow. So then, but the interesting thing is that this can change during any time of the day. Like some of you guys may know, just one single headline coming out may alter risk sentiment. So then, but for the time being, right now, as we move into the U.S. trading session, we're seeing a handover of that negative risk sentiment, and that risk aversion is sort of the prevalent theme for the day thus far. But let's go on and do some technical analysis for our Euro-US dollar pair and US dollar Japanese yen. Okay, so right now we're looking at the Euro-USD currency pair, and we're currently looking at the daily time frame. What we typically do is do top-down analysis. Typically, I start from the weekly, then I go down to the daily, then I go down to the 4-hour, and then to the 1 hour, etc., etc. I do top-down analysis because, to be honest with you, it's impossible for you to really know what's really taking place if you don't do that top-down analysis. So it's important, it's imperative, and I know a lot of traders like to stay and scalp and do the 5-minute, 15-minute chart, but trust me, guys, if you want more accuracy and more consistency in your trading, you have to do top-down analysis. So then right now we're looking at the Euro-USD, and we're looking at the daily chart. I didn't start at the weekly chart. But as you can see, quite a number of things have happened. You can see really for the past few months, this market or this pair has really been in consolidation. It's been really consolidating, but making higher lows at the same time. And what we want to do is draw in that low down here, because what we see is this long-term daily ascending trend line support. So then we definitely want to draw in this daily ascending trend line support right here on the daily chart. So then we have this daily ascending trend line support, and price is currently testing this area now. You can clearly see it. It's pretty obvious. Price is testing this particular area now. But if you look at it, especially over the week, we really felt that we made a new high. If you look at your chart to the left, you can see that price broke this area or zone of structure. Let me change the color a bit. Let me make this color. Okay, so then price broke this zone or area of structure right here, and then created a new high or a higher high and a higher close. This is what you call a new structure high. And then after that, we saw retracement, and price fell. Of course, we got stopped out of one of our positions, but price continued falling, and right now it's this is from like 2 weeks ago, guys. I don't know if you guys remember, those that look at our signals. We were in profit by 50 pips, but price fell and stopped us out, which is typical of trading. This is why risk management is important. But right here is where price is testing right now. It's testing this ascending trend line support, and really this ascending trend line support has really formed what we would call an ascending channel. If you actually drag this line up here, you just clone that line, we drag it up to here, to this area, and we could see that price created this ascending channel, right? So one thing you have to understand about these ascending channels is that oftentimes when you have an ascending channel after a strong slide to the downside, it forms a particular classical chart pattern. Now, for those that are familiar with classical chart patterns, I mean, if you're not, then it's okay. What pattern has formed? What is this that you see right now? If you guys don't know, don't worry, I'll let you guys know. But we see a particular classical chart pattern that is commonly seen in the market. Yes, Brandon, yep, Brandon chimed in. And what we see is what you would call a bear flag. And this is a trend continuation pattern. What this shows us is that we should see momentum or bias to the downside if this pattern breaks. So in other words, if we see this trend line break, if we see price break and close below this trend line, then we can expect a further slide to the downside, possibly to $1.10. Because one thing you have to understand about bearish flags is that you can sort of estimate or get an idea of how far price may move. What you would do, you would take the flagpole and then you will superimpose that at the most recent swing high. So if we clone this line and drag it right around here at this swing high, what you can see is that price could possibly go to this $1.16, $1.1163 area. But I think price can actually go to $1.10. But this is what you can expect from this pair if price does break to the downside. Now, as far as today goes, what we have to do is see how price responds around here. Because, of course, this area has been as support. This trend line, this ascending trend line, has been respected as support. And price has bounced from this trend line multiple times. So then we can potentially expect a bounce from this line soon. It could possibly happen. We have to plan for different scenarios to play out. If price respects this trend line, then look for an opportunity to buy. However, if price breaks this trend line to the downside, you will look for an opportunity to sell. But what we're going to do is go to a smaller time frame and see if there's any consolidation happening on a smaller time frame. And if you go to a smaller time frame, like the 4-hour chart, we have a few things that we have to bear in mind or look at. For starters, we have this descending trend line resistance on the 4-hour chart. So then let me just draw this in. And we have this descending trend line resistance. And you can see that price has been respecting this descending trend line resistance. It's been respecting it each time. And that's something for us to take note of. But what we can expect is a possible push to the upside. But to be honest with you, I won't really be confident in a move to the upside until we get a break above this area of congestion right here. So then what I'm going to do is draw in this area right now for the sake of time. This area between 1420, you could say, and around 1400 psychological area. And just drawing this area right here. Because, right now I'm still on the sell side right now. I have no reason to go long yet until I see a break of this level. So then this is what we can expect. If price pushes higher, let's just assume that price decides to push higher and it breaks above this level or area right here. Then wait for price to retrace and correct, possibly to retest these lows right here, and then look for a buying opportunity from there. And your buying opportunity can go all the way up to maybe this area of structure resistance up here that we drew in on a daily time frame. So then that's one scenario that we can look at for the Euro USD. But what if price decides to break this ascending trend line support or this bearish flag support on the 4-hour? Well, if we get a 4-hour break to the downside, let's just say that price extends lower and it breaks to the downside, then what we should look for is for price to retrace and retest this trend line as resistance, because what was once support will now function as resistance. And what you can do is maybe trade it to these areas where these wicks are right here, and then look for an opportunity to short from there. So then these are the different trading scenarios that we have for the Euro USD, and you have to be open and flexible for whatever trading scenario plays out in the market. Remember, you can't be rigid when it comes to trading the market. You have to be able to adapt based on what the market gives you. So then this is what we're looking at for the Euro USD right now. I'm just waiting for price to show its hand. I'm waiting for price to tell me what bias or what particular trading decision I should make. So are there any questions about the Euro USD before we move forward? Going once, going twice. Okay. If there aren't any questions about the Euro USD, then what we can do is oh yeah, and here's another, before we move forward, here's another trading decision. If price does push higher, and let's just say that we see bearish sentiment around this area of structure, like price can't break, we see bearish sentiment, then what you could do is trade intra-sell and trade it right back down to this trend line right here. So then those are three different scenarios that could take place for this particular pair. So all right. Yeah, yeah, there's a lot there's a lot that I want to say, but for the sake of time, you know, there's other ways you can kind of look at this where the price action can provide technical clues, whether it's topping or whether it's bottoming patterns that can kind of help you identify what you need to do at those particular zones. So then I know for the sake of time we don't have too much time to go over that, but that's just something, a little tidbit of information for you to know as we move forward and discuss the US dollar Japanese yen. Yeah. Okay, so right now we're going to go and talk about the US dollar Japanese yen, and we're going to go right back to the daily. And we're going to talk about this particular pair since we don't have questions about the US dollar Japanese yen. I mean, about the Euro USD. All right, so right now we're looking at the US dollar Japanese yen, and if you look at this chart, it's pretty apparent what the bias should be based on this daily time frame. And let me just ask you guys this question. Okay, so then based on what we see from on this chart on the daily time frame, should we be looking to buy or should we be looking to sell? Also, please bear in mind what we just mentioned at the beginning of this webinar as far as the sentiment or bias for today. So should we be looking for a sell or a buy? I know Tim says buy. Does anyone else want to take a stab at it? Okay, well, based on what we're seeing right now, I'm still on the short side, actually. I know Brandon said sell. Yep, exactly. Brandon is actually one of our members of our private trading community. Based on what we're seeing right now, you want to look for an opportunity to sell. That's what we want to look for. And we're going to talk about this in greater detail. I know Evan says buy. You know, it depends on what model or style of trader you are. You can be a scalper. You can look to buy. Maybe on a smaller time frame. If you see that technical setup, you can look to buy. But based on what we're seeing right now from this long-term downtrend, you got to remember price moves in waves. There's always impulsive waves and there's corrective waves. And what you got to see, you got to know that this is what you would call an impulsive wave. Let me just draw it. Price broke this recent swing low, and this is what you would call the impulsive wave or the motor wave down here. So then this tells you what our directionality should be. So right now, what you see is you saw this correction in price, and this correction in price is really what you would call an ABC correction or ABC pullback before another strong selling opportunity may take place in the market. Now, let me show you guys what I'm talking about. If we go to the 4-hour chart, right here, we're on a 4-hour chart, and what we see is an ABC correction. And this is what I predicted would happen even before it happened. I said, guys, look for an ABC correction. This is for our premium members. But what we saw was an impulsive move higher from these lows right here. This move to the downside right here was due to the flash crash. And what you can do is ignore this move right here. Just treat it as if this move was not supposed to happen, and then take your technical analysis from these lows right here. But what you can see is that we had an AB equals CD type move. Let me just draw it in for you. So then we have well, let me just define what an ABC pullback is. I'm going to try to make this as quick as possible. But an ABC pullback is where we have a three-wave pullback. We have a leg A, then B, and then C. So then, in other words, this is how it looks. We have first wave, leg A. Second wave is a corrective wave of this correction, which is leg B. And then we have a push higher, which is leg C. And what you can do is, well, let me delete this. You can take a measured move of this particular wave right here, right? And what we can do is clone this line, because what you know is that the market moves harmonically, it moves symmetrically. And what you can see is that right around this same area is where we see price potentially pause and hesitate. It reached a point of exhaustion. So then right here is where we could possibly see a turnaround in price and a nice swing or push to the downside. And if you look at this chart right now, you see what appears to be some form of topping. But price will have to break through. Before we even have a short bias, price will have to break through, or sell bias, price will have to break through this trend line. Yeah, this trend line support right around here, just to play it safe. Price will have to break through this trend line support, and that's when we can enter a long-term trade to the downside. However, this goes in conjunction with what a few people said. A few people said we should be looking for buying opportunities, and actually, yeah, that is the case if we see some sort of consolidation and breakout on a smaller time frame. And if you look to the left, we see that price is hitting this previous structure level right here. Remember, well, for those that may not know, just look to the left, structure leaves clues. We see price hitting this structure level right here. So then let me just draw this in right now. So then this zone right here is a zone of 4-hour structure support. So then there's a possibility that we could see a buying opportunity right here. So then what you can do is go down to a smaller time frame and look for a buying opportunity, or just wait for the 4-hour candle right here, this 4-hour candle, to have a break and close above what? Above this previous high right here. So if price can break and close above the high of the previous candlestick, then that could be a buy signal. What you'll do, you'll enter a buy, you'll place your stop maybe behind this swing low, and then you'll see how price can go. And I think price can go possibly to this area of congestion right here. That could be your target, somewhere around here, maybe at the 109.64, 65 area. Right around there is where you can have your target if you do decide to do something like that. But in the meanwhile, what we could do is also look for price to break lower and possibly give us that sell signal. But yeah, that's it for this particular pair right now. So this is what we're looking for. Let me just draw it out for you guys. Either price breaks to downside, breaks this low, or breaks this trend line. If it does, look for price to retrace and retest this trend line. And retest this trend line before we look for a strong selling opportunity to the downside. And actually, guys, this can create what we call a grand slam trading opportunity, where you have a tight stop. If you know how to time your trade properly, you can actually get a very high reward to risk ratio trade. And I know we go into more details about the grand slam trade in the members area, especially if you remain a member after 2 weeks. You'll have access to that strategy where you can see 20-to-1 reward to risk ratios. I mean, high percentage gains trades if you are patient enough and if you time your trades properly. But yeah, that's pretty much it. And like we said, this is our sell opportunity, and our buying opportunity is if we get a break and close above this level at 109.48. If you see that break and close on the 4-hour, then look for an opportunity to go long.
Yeah. Yeah, and I was going to add to this, hello everyone, this is me, Marvin, again. I know on Wednesday, the Bank of Japan is meeting. They'll be having their first central bank monetary policy meeting of the year. And to be honest with you, we're expecting them to keep their monetary policy position the same, with, of course, keeping, doing qualitative easing, even yield curve control to keep the 10-year, JGBs, the Japanese bond yield, 20 basis points either above or below that 0% level. So then they're going to still target the yield curve and do qualitative easing, quantitative easing, but there's the potential later on of them possibly lowering their inflation forecast, considering what's going on globally with this global slowdown that's taking place. So then, of course, until after Wednesday, we should get a clear sign as far as what the Bank of Japan is doing and how that would affect the yen. So then I just kind of wanted to keep that out there, because I know we won't be meeting until next Tuesday, and by that time, the Bank of Japan would have already met. We're not expecting them to do too much. The meeting on Wednesday may be a non-factor. It may not be anything important, but it may provide some cues or some clues as to how to position yourself in the yen moving forward into the year. But one thing I wanted to point out, which is a good currency or a good index to look at, especially when trying to trade the euro USD and US dollar versus Japanese yen, is to also look at the Dixie, or the US dollar index. And I know we didn't touch on that for this particular technical session, but we may do that for next Tuesday.
Yeah. So yeah, that's pretty much it as far as technical analysis for today. Just bear in mind that we're waiting for price to do certain things before we execute a position. We don't want to jump in randomly. That's very important when it comes to trading. I know someone asked a question. Yes, I would like to ask for the normal time of this presentation, as your marketing states 1.5 hours. Well, yeah, actually, well, we started this presentation at about 30 minutes ago, 7 a.m. Central Time, 12 GMT time. Yeah. So, yeah, not too long ago.
But sometimes, yeah, like we get, we may got the GMT time confused because sometimes, the daylight saving, there's that disparity or that difference. So then we apologize for that if that was the case for those of you guys that are from Europe and you may have was mistaken by the time. But typically it's pretty much Chicago time, 7 a.m. Central Time, or 8 a.m. Eastern. We'll be meeting every Tuesday to do this Technical Tuesday session, where we will just allow you guys time to ask your questions. If you have any questions about the Euro USD pair or the US dollar Japanese yen, we can help you with that, or even any trade related question, period.
Yeah.
So then,
yeah, he said, yeah, that would be 1 p.m. GMT. Yeah. So then, yeah, we made a mistake. Yeah, we apologize for that. Yeah, we made a mistake on that. So then, yeah, that's probably our fault with that. But yeah, I guess we can see if there's any questions that you guys may have. I know we got a few more minutes. I know we're at the end of, or the deadline of our particular meeting, but we want to know, is there any questions, anything trading related? We're going to keep this maybe brief. Maybe for the next 4 minutes, we can answer any questions that you may have that's trading related, or anything that you may, any questions that you may have about the lab trading community. I know we do have a private trading community called the Trading Lab, and you guys can join, of course. We've got rave reviews. A lot of people love what we teach. We actually share concepts in there that we don't normally see too many people talk about. So if you guys want an edge in the market, if you guys want to know how to trade, know how to manage your risk and do good risk mitigation, because that's the failure and setback with a lot of traders. They don't use proper money management or risk management. They don't know risk management skills, and that's the reason why they're bleeding their trading account. They're losing money after money. It's like an endless cycle of just defeat. They're just losing and losing and losing, and then next thing you know, they don't have anything in their account. They blew their trading account, and it's because they don't know or understand proper risk management skills. So, in this, in our trading, we touch on that. We take principles from gamblers, professional gamblers, and we apply those principles even in the financial markets. And that may sound kind of crazy, but trust me, you can learn a lot from a professional poker player or a professional gambler when it comes to how to assess risk and manage your money. So we talk about stuff like that, and we also share some more sophisticated stuff in regards to position sizing, but we share a bunch of other stuff as well. But of course, this is the members area, and you know, we usually have webinars 3 times a week, but you guys can make a decision on whether or not you want to join. The next webinar for our premium members will be tomorrow, which is Wednesday. Wednesday morning around the same time. So then if you guys want to, you guys can join our private trading community and just test it out for 14 days if you want to. So yeah, are there any questions about anything before we move forward? Yeah, I know my brother wants me to show you guys the different parts, but yeah, like we have different sections. Yeah, actually the most powerful section in my opinion is what we call, well, this is where you get the Grand Slam trading strategy, but is where we talk about the weekly outlook. We have the monthly training videos right here. We have our potential trading setups. Even though most of these setups will be sent to your phone, actually. Most of the setups that we do post will be sent to your phone or sent via email. And then we have our live webinar recordings right here and our weekly outlook videos right here. And really, this is probably the best part, in my opinion, one of the best parts, because of the battle plan that we give you guys for every single week of trading. Like, if you guys take some of the trade ideas that we list in these weekly outlook videos, you guys should do quite well. Let me go to a past one. I don't want to go to this week's one. But let's go to last week's one right here, just to show you guys what we do. So then if you click on this link, we take you to a page where you can look at the weekly outlook video. We get a brief overview of what this video may talk about. And then right below this video, we have what you would call notes. We place every trade idea that we're looking at for these pairs right here. So then you can see for the Euro USD, we had a plan A, a plan B, a plan C, and a plan D. We have multiple trading scenarios for each particular currency pair so that you can look at and know exactly what to look for once price reaches a certain zone or level. So then we're handing you guys the blueprint before time. At the beginning of the week, you guys would know exactly what to do before you guys start the trading week. And this has helped a lot of traders. Like this week was pretty actually good. Actually, we had quite a number of winners from this, you know, from this weekly outlook. But beside each pair, we have the time where we talk about that particular pair in the video. So then for the Euro USD, we talk about that at the 1 minute and 8 second mark. For the US dollar Japanese yen, we talk about that pair at the 10 minute and 16 second mark. But you guys get the idea. I don't want to go over too much and sound too salesy, but we do have this premium membership for those that want to take your education and your knowledge to the next level. So it's still $1, guys, to test it out. And let me know if you guys have any questions. But for the most part, that's it for today, guys. Thank you guys so much for coming to our first Technical Tuesday session. I hope you found it very helpful. I hope you guys got something out of this session. Of course, there was a lot that I could have shared with you guys today, but if you just stick to the fundamentals of what about in this session, then you should do fine as a trader. Of course, you have to understand how to read a price chart, which we really go over in extensive detail in our video tutorials within the members area. And we talk about structure areas and how to trade consolidations. We talk about a lot of different things. But if you guys want to take your education to the next level and receive trade setups for multiple currency pairs, not just for the Euro USD and US dollar Japanese yen, if you guys want to receive multiple trade setups and trade ideas, just let us know, and or just join, and you'll have access to that. But that's it, guys. I don't want to hold your day hostage. Thank you guys so much for being, and we'll see you guys next week. Thanks a lot. And if you guys have any questions, you guys can contact us through the contact form on Forex Anatomy. It goes directly to our email inbox. But thanks again, and we'll talk to you guys soon. All right. Bye.